The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And what happens? Well, I think we got it. We're pretty much through options expiration, at least Delta Neutral, which happened yesterday. My thought was that they were going to push it down. They were selling a lot of puts, and generally that means that those people are going to see that cash go to money heaven and not into their account. Most people short at the worst opportunity. And we'll cover more about that today. But as far as I could tell, it kind of looked to me like everybody was about as bearish as you want to see anybody in December. Volume will start decreasing. And with that, if you have a stock that has a lot of people that are fairly short, not uncommon to see this thing just slowly melt up into the end of the year. Not a good time to be short unless you have an ultimately compelling case. If you wanted to go short, maybe January, but even then, we are in the casino. Certainly Bitcoin is. And when you see things like Bitcoin go to the moon, it's not generally over. There's going to be, it develops a massive gambling mentality for those people in the stock market. And as soon as they get their fingers burned on one thing, they'll go to another. And so generally in a bubble, if they get burned by the techs, they'll go to the stodgy S&P companies. They'll go to anywhere to get some action. And that's why markets are so good at taking cash at the highs. They develop and reinforce bad risk-taking opportunities. But normally you don't just get one. It's not the days of the tulip bulbs where that's the only game in town. You find risk-taking in a lot of different places these days. And I think my guess is that we'll see people coming out of Bitcoin eventually when they get their hands burned, and they'll go into other kind of high risk or maybe even call it high opportunity things. But normally it was time.
The following takes place between 2 p.m. and 3 p.m.
Did we do that? I can't even remember now. I lost my train of thought. But what do we have going on? Anyway, like I said, don't see much. Oh, I was talking about the NASDAQ up 36 when we were so rudely interrupted. Oh, now we're actually on even in the den. Okay, so what else do we have? Well, that's about it. Just look for slightly improving prices through the end of the year. If we get up there and there's a big push on light volume in the last few days of the year, think that maybe there'll be a dip coming into the first few weeks of January. But my thought is that with all the risk taking, that we're going to see more risk taking, not less. If Bitcoin blows up, they're going to go back and try to figure out a way to make up any of those losses. But that's generally what happens in a market bubble. In the housing market, of course, when it blew up in 2008 and even in the dot-com, as soon as that was over, everybody ran to other things expecting the same kind of results. And generally that does not happen, but they do not give up easily. They like that cash. Okay. What do we have? Oh, need to do some history.
And it's all just a little bit of history repeating.
It is history repeating on this day in 1941 at 7:55 a.m. Hawaii time. A Japanese dive bomber bearing the red symbol of the rising sun of Japan on its wings appears out of the clouds above the island of Oahu. A swarm of 360 Japanese warplanes followed, descending on the U.S. naval base at Pearl Harbor in a ferocious assault. The surprise attack struck a critical blow against the U.S. Pacific Fleet and drew the United States irrevocably into World War II.
Mr. Vice President, Mr. Speaker, members of the Senate, of the House of Representatives, yesterday, December 7th, 1941, a date which will live in infamy, the United States of America was suddenly and deliberately attacked by naval and air forces of the Empire of Japan.
And of course, they were all sitting in there because, the politicals didn't want us making it look like we wanted to cause a war. And it's almost always the wrong thing to do. Weakness is always met with strength, and it was on this day in 1941. Of course,
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, grew up, of course, from the time I was 3 months old till I was 10 years old, living in Hawaii. And I think until almost I was 8 years old that I live on Hickam Air Force Base. I could stand on the doghouse in the backyard, look over the fence, and see the Arizona Memorial. They had cut the top of it off, I think, in 1963 and put it behind a fence. That fence was not imperviable to a bunch of young kids with bicycles that could go out and find it and play war on that. Of course, got in a little bit of trouble for that. And, of course, interesting growing up on on Hawaii, riding your bikes out to the airfield and watching the shot-up F-4s come back in. All kinds of stuff falling off of them. And it was an interesting place to grow up and put your finger in the holes that are still there in a lot of the hangars. Still there. Always a big deal for me. We had some a little discussion, and that's the problem is that you never have enough time. But I always want to ask these questions because they're important. Because they bring a lot of, not always, but I just wanted to make sure they didn't bring up a lot of stinking thinking when you get into statistics. And the biggest one I always bring up, of course, is you get a lot of people that do studies and they go 85% of all options go unexpired. Therefore, options are the easiest way to go to the poorhouse. And of course, nothing could be farther from the truth. The question is that last 15%, what do those pay back? And almost always, especially people that don't and haven't done a lot of statistics, kind of stop right there. They just go, well, it was 85% and that's it. But there's always two sides to every coin. I just always want to ask what the other side of that coin is. And that is, what to say that month of, just for argument, month of July is always up on average 5%. But in 10 years, you went along and then 1 month it was down 50%. Well, you just gave up, if it does that once every 10 years, you just gave up all your winnings again. And that's part of trying to figure out the real risk and reward. Statistics are a nasty business. Mark Twain said there's lies, damn lies, and statistics. And they're one of the easiest things to get caught up into. And I try not to. But again, if you get paid 50 to 1, but you lose 9 out of 10 times, is that a good bet? Well, that would make you a billionaire in about a year if you could do that every single day. So yes, you need to know the asymmetry of everyone. And so normally in statistics, the first question is, what was the biggest outlier of that 10 years or 20 years or whatever? So not trying to get in an argument in the den, just kind of telling everybody that, yes, there's a lot of people out there that have statistics. The first thing you should do when you hear a statistic is start asking a lot of questions. Doesn't mean they're wrong. Just means that you need to ask an awful lot of questions because there's so many of them, especially the news today will go out and ask a question that basically comes down to, are you still beating your wife to somebody? And, what do you think of this guy? Is he still beating his wife? And of course, the assumption is he already is. And you don't know that he is. But there's leading questions. There's a lot of other stuff. There is nothing deeper and more murky than statistics. Question, in grade school, did you watch lots of kids getting beat up? I can't remember ever watching a kid getting beat up. I don't know about that, why that question's out there. But no, you did not misbehave living on an air base, because you could, if you were a creep as a kid, you could keep your dad from getting a promotion. And that's what it was all about. Once you get to the officer corps, it's all about promotions. But never can ever think of a kid getting beat up at all. But I don't know what the difference of meaning is. Yeah, you can get hyper technical on anything. But anyway, I've just got a bugaboo. And it may be one of these things where, like, smokers are kind of like the worst people in the world to talk about quitting smoking with. In that, once I started taking statistics, I kind of knew how incredibly blind I was and all the things that need to go in, and how many mistakes, even when you know everything, how many mistakes and bias that you can still make. So we'll think about that. Okay, let's take a look at some charts. ABC, which is Amerisource Bergen. Looking at a few of these things, a lot of these financials look like they've run into a full head of steam as they went higher and filled these gaps. I was looking at this one in the newsletter today. Down on the 3rd of August, did so with 7.4 million shares. Got into this on December 4th with 2 million shares, and then back and sideways. Aveo Pharmaceuticals, another one that I thought was kind of interesting from yesterday. I like this one, and this is the pattern I like, which is that you have your high volume low back here on October 26th at $2.60 with 3 million shares. You tested that with 1.7 million shares yesterday. You pretty much get your instant bounce out of these. Now, if they come down a lot of energy, they'll tend to go sideways, but this is exactly what I looked for. The October 26th low to the November 6th high at a 7 on my power law vector indicator number, 4.7 on the way back down. So you basically have a stock telling you the same thing on the way up and on the way down, as well as on those swing points. It's telling you that there's not a lot of volume testing the previous swing point, and at the same time, the energy on the way back down did come down lower. What is that? My life today, hard ever. Yes, that is, I don't know. Oh, okay. I have to follow these conversations in the den sometimes, and it takes me a little bit. Frontline Limited, FRO. Looking at this one, the August 31st low, $4.87, 2 million shares that day. We're just coming in there and testing it today with 260,000 shares. Now, here's where, when the energy is the same on the way up, on the way down, you don't really get that same kind of instant bounce. Now, this thing's sitting on a gap, and that gap could go just a little bit further down because it's actually a double gap. So we'll go back and show that here. A little too far back. Here we go. So you got this gap. It's kind of bouncing on it now, but normally what you're going to get is a couple of more bounces, not back up to the previous high generally, but a couple, maybe a day or two kind of bounces, and then finally the volume comes down and is a little lighter as you hit that level. We'll talk about this more when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I got to know why someone would ask me a question like, did I see a lot of kids getting beat up? That kind of makes I did wonder why that kind of question would come out of the blue. Maybe you can post that in the den. It just bothers me. Because it wouldn't be a question I thought I would think of. Now, maybe that's because a military brat, you think about it. But I remember one of the, when we were in, after we left Hawaii, we went to Air Force Base in the Midwest. And one of the colonel's kid went over and accidentally burned down a train bridge trestle. Wasn't that big. I think it was like 20 or 30 feet long bridge or something. But he was over there, I think, with a magnifying glass, roasting ants and bugs on it and caught it on fire. And that was the end of that guy's career. So I don't know. Just to keep me sharp. Why always with the questions? Okay. Question in the den that actually has anything to do with the music, with the market, is the TLT. What do I think about it? This thing just looks like it's continuing in this trading range. Yesterday, this went up and hit the gap down that had almost 18 million shares with 12 million shares. And that was about it. It rolled back over into the trading range. And eventually this thing's going to break out and give you a signal. But 122 to 128 is kind of the trading range in the TLT. And I don't see the kind of energy either on the way down or the way up that changes much of anything. But yesterday's light volume test of that gap and today's pullback pretty much kind of makes me think that we're still just in a bigger trading range out here and consolidating for the big move that is yet to come, probably after the beginning of the year now. So I don't see a great deal. Okay. What do we have here? A couple other things. Let me check my email. Okay, what else do we have? Look at a few more. Harley. Take a quick look at this one. This one kind of broke out, pulled back into its trading range, and now is just kind of begging at this July 27th high, $50.88, 5.2 million shares. You got into that at the best day with 3.3 million shares. So you're not able to basically buck this. I keep on thinking that the generational change has already occurred, and all the 50 men of a certain age, maybe that's a better way to say it, men of a certain age probably have bought all the Harleys that they'll ever need, because the things sit in the garage 99.9% of the time and only come out. So the question is, how many new motorcycles really are needed? And especially with a lot of younger people out there probably buying, as I did, the Rice Rockets instead of the big lead sleds from America. Up today, but not much juice so far. 1 million shares compared to 2 million shares. So I don't know if there's a whole lot you can say about that. A lot of bad PR coming Oracle's way. I haven't heard so many people talk smack about a company in a long time. And Oracle's got it, and I wasn't surprised to see this thing bounce today. But a lot of just seeming like, normally, they don't do well on earnings, or their product stinks or something like that. But just Oracle's so last year kind of arguments always kind of fall on deaf ears to me. This gapped up on, what is that, June 22nd was 63 million shares. Came back, gapped down on 66 million shares on September 19th. And now this thing's resting on support. You had 13 million shares yesterday as it pierced the 16 million share candle of September 25th. So you've got fairly light volume compared to this gap up that had 63 million shares, only 13 million shares yesterday. A lot of people, again, more of a sector rotation thing than anything really changing. You do have to say that Oracle did at least have a little lighter energy coming off this October 31st high back to this low. Not enough for me to buy it, but a lot of those stocks never move enough to get me interested in it. I think we talked about Monday, Vertex Pharmaceuticals. This is another one that looks like it's filling its gap very nicely from 2017. What is that? July 19th, that had gapped up on almost 17 million shares. You had 3 million shares, almost 4 million shares on October 26th. Now we're back into that. Last few days have been about 1 million shares. This one looks very interesting, and so does the IBB, but not quite yet. This is one of these things where I think we could see sector rotation into it coming around the 1st of January. Now, this one, another one, is a good example of why I don't like certain sectors, and that is if you have energy up, in this case 2.9 on my power law vector indicator, from the August 21st low up to the October 6th high, but just more energy, 3.4 on the way down from that October 6th high back to the November 15th low. You even have higher volume out here on this November 15th low. So what you would like is a bounce without a lot of energy, and then even lighter energy as this thing comes back around the $100 level. You may not get it. If you are thinking bearish, you want to see this as it goes to the end of the year kind of creep higher on very, very light volume. If you're bullish on this and want to buy it, what you would hope for is a pullback on lighter volume to that mid $100 level. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And of course, you can always put a message in the den. Okay, what else do we have out here? Somebody wanted to look at something. Got a question to take a look at NVIDIA, NVDA. This, as we said, this thing needs to close above 189.50 pretty much to say that this pullback is pretty much over with. You got a nice bounce out today. It just needs to hold up here and not close a buck lower, and that probably low is in. Now, you did come down with some pretty heavy volume, but again, way too many shorts, in my opinion, on that stock. Let's take a look and see what those guys did yesterday. Yeah, 25% short in that one. So not, again, the numbers I give are daily short sales, but you only know how many people started a short. You don't know whether they went home with that other than every 2 weeks, which case that is even delayed a week. So by the time you get the data, you really only know what the market and how the market was short in that particular stock 3 weeks ago, which is not always a good thing. Well, actually not 3 weeks ago, could be 2 weeks ago, depending on how the numbers fall. But you're always looking in the rearview mirror with those. At least, I still just barely hear that outro music. Anyway, we'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I had a quick question to ask about Facebook. Question is basically, I'll paraphrase it. Is this Oculus Rift ever going to make any money for Facebook? And it's kind of like 3D television. Man, that thing's come for around 4 or 5 times. It's never really caught up. You still need about a $1,500 computer to run this Oculus Rift device, which of course is another $500, and then the software is really expensive. And eventually that stuff's going to come down. Computer power is going to get better at a lower price. All that stuff happens. The question is, I mean, that was going to be such a big thing by, what was it, by February? They were getting rid of the kiosks for Oculus Rift in Best Buys, and we really haven't heard much about it this year. It's just really tough for me to see that this stuff catches on without a particular, what they call in the industry, a killer app. The demos are really good and show you a lot of what's there. You really need to buy something that's so incredible that no one, that especially kids, can't bug their parents long enough to buy this thing for them. But again, it's not like just buying a single thing. If it was just the $500, that'd be it. They did sell some of them last year. A lot of them got returned. People didn't have a $1,500 computer to match up with these things to actually get them to run. And I don't see that much change in a year, or haven't heard about a compelling killer app to actually drive this stuff. So great technology in need of a niche market to get it going. That niche market, I haven't seen the games. Everybody talks about what they've seen, but there's nothing for sale out there to really drive it. So don't think, I haven't heard a lot about them this year. Eventually, maybe something's going to go on this thing, but it's always seems kind of out of left field. Apple was basically broke when a couple of programmers brought VisiCalc to them for their Apple II, and that really spurred sales. Apple didn't plan it. A handful of years later, Apple is again almost broke in 1986 when a company brings a package for desktop publishing in and saves their bacon once again. There's a great book called Accidental Empires, and that book really talks about how many times that it was something that no one really had planned on that really turns those things around. Even not Steve Jobs, Bill Gates talked about how he was waiting for 4 years for the killer app for the internet, and until someone really brought a decent web browser and server software to serve those websites, he kind of, they were all just kind of staring at each other for 4 years, trying to figure out which way this would go. But it wasn't a big seller for him. A lot of people said that they came in late. He just said, I don't know which way this thing's going to go. And that's it. Anyway, give me a call at 877-927-6648. But anyway, Facebook's had some decent shorts in it. Nice 3 days out here, but not a lot of juice. But I don't see anybody, busting this through the previous high of 184. But at the same time, this is going to be continually harder and harder to see people sell into next year, at least retail. Heard a lot of stories about why you wanted to sell this year, but they all sounded rather dubious. And a lot of people saying, well, you just want to sell this year. And I still can't make any sense out of it. Maybe someone else can, but I'm not really buying it. I don't see that much change in the way that a lot of these guys are going to be paying their taxes this year. And of course, that tax bill still is not signed, hasn't come out of committee. A lot of things can still change. So let's take a look at some other ones out here. Let's take a look at Avago. They had earnings last night. Everything looked fairly good, talking about taking off of Qualcomm. Oh, yeah, the Lisa, too. Yeah, that's an interesting PC. But in fact, that's a good example of still missing the killer app. But that was really just more of a prototype for the Mac. Avago Technologies. Again, this thing opened up at 275.70 today. It's pretty much sold off most of the day. While a lot of people are making good on this, the question still is, are they going to be paying way too much for Qualcomm? And if they end up buying it, the answer is yes. So I would rather be on the Qualcomm side of this argument than I would be on the Avago side of this business. But here's another good example of why probably even with this bounce, I would have been selling it. November 15th, you had 258.03 with almost 3 million shares. Came into that yesterday and spiked it into earnings with almost 5 million shares. And then again on the Power Law Vector indicator number, 2.6 on the way up, but 3.8 on the way down. So had a lot of sellers out here. Not going to be surprised. If you're looking at these things, they're probably going to be better prices for you the 1st of January than probably in the next couple of weeks on these that continue to see rather high selling pressure. Some of these are probably going to be a little bit better than others. Let's take a look and see what's going on out here. Update on Snap. Still continues to have super high short sales in it on a daily basis. Let's take a look at that because I think that was on my list today. Still 20% yesterday. So these people have not laid off shorting. Okay, question about whether you get first in or first out in the tax bill system. And yeah, you never know. But again, until a bill is signed by the president, I don't know. And a lot of people have tried to come up with all kinds of things. This tax bill does this and this tax bill does that, both pro and con. And again, until it's signed and it's made its way through committee and both sides vote on it again and the president signs on it, I don't know. It just seems to me like a lot of effort to figure out what I don't know, which is, I can tell when a lot of people are going to do something. I can't tell if one person's going to do something. And unfortunately, you get down to a handful of people in Congress, and there's a lot of times when it's just very tough to tell what a single or even a handful of people are going to do. So I kind of just wait. Anyway, second nice doji out here on Snap. Not much juice out here. Again, fairly decent shorting on this. People have been emailing me. Yeah, if you're long this thing, I did think you just sit on your hands, let this thing, especially with the volumes kind of count starting probably on Friday. You're going to see a dramatic change in the volume through the rest of the year. This is going to be harder and harder for people to set and being short. We'll be back after this.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
As we get into the close of this show, of course, I got Tom O'Brien and then Andy Heck later today. So we'll see how some of this stuff is happening and going. Anyway, we've got the S&P up 6 points, the Dow up 50, NASDAQ up 31. I suspect we've seen the lows of the year in options expiration. Shows a lot of sales of puts, which is normally kind of a good sign that a bottom is in. People are buying that protection. They will not end up being able to cash in on it. And of course, 80% of the time from options expiration, or 85%, is bullish from that Wednesday. It sets at least the low through that 8-day later Friday, which takes us into the 15th. And a wise person in the email brought it up. That is why 80% of the time, especially in options, 80% of the time it goes up. It's what happens those other 10, 15% of the time when it does close lower. And we haven't had that for a while. But normally it is hugely asymmetrical and a good pickup for the emailer here, which is you've got to know the asymmetry on that. If it lost 80% of the time, what happens when you get 50 or 80% back that one time, and you're not betting all the time either? You wait and take your shot. Anyway, interesting things going on out here. A question about Tesla. Yes, do I still think it's going to pull up maybe to 340 or 350? It certainly could. This thing's, these stocks like Snap that are perpetually 30 to 50% short have a huge opportunity to go and club these. Now, this did get up a little higher and put out here. Again, I would love for this thing to get higher, get an opportunity to pull the trigger on this thing in the first part of the year short. But I'm not trying to do that now. So when you can, not when you have to. See you here tomorrow. Same back channel, same back time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.